population growth. So there are advantages and opportunities to take recognition that we are going to see increased production. And that means, to a small extent, that we have to start being more competitive, that there's going to be more competition to reach those market baskets, the households that we're trying to get to, because either domestic production is going to start to supplant the imports, or potentially we'll see certainly other importers trying to get into those markets. And at the same time, while we expect yields to rise, they're not rising that quickly. And in fact, if we look at kind of the last 20 or 30 years, that trend is slowing. And that's an important feature for us. So while we have populations to a certain extent that are slowing, our productive capacity, our research and development, we really have to kick that into a higher gear if we're going to see improvements in the production and certainly gains in yield as we go forward. And then finally, which I won't touch on too much, except just the recognition that water is going to be a continued constraint. Some of the gains that we've had in the United States have been based on irrigated and more consistent ability to water. Certainly, we've moved into some varieties that are a little more drought resistant, but with weather variability, we don't necessarily have that cushion to ride back on in terms of water. Good news and again, this is for primarily focusing on the developing countries, rising per capita incomes are great. That the change in the mix of the commodities that people want to consume or are able to consume is made possible by those rising incomes. Urbanization and improved infrastructure, the ability to have a cold chain that enables you to get your products from wherever your home port is into the supermarket or into the market somewhere else around the world really is dependent on having that kind of infrastructure in place. It works both directions in the sense that it also allows for products to move out. But that cold chain is important. And then the fact that these markets, as we urbanize, become more and more of the source. The live markets disappear, and we see a lot more of the products that we can trade moving into these markets and in a sense are made available on those grocery shelves. Changing diets, again, not to say that there's one diet out there that's perfect. I certainly won't argue that mine is. But the idea is that we've recognized that when we do see changes in income and urbanization, that mix of what is consumed does change. And over time, that's something we want to attend to. And again, finally, and I'll point out on some other slides, in fact, this next one, that the growth in population is really coming out of developing countries. So if we get out to 2024 and we're all here, we can expect that 83% of the world's population will be in those countries. And about 40-some% of the gross domestic income or gross domestic product, as we have it, will be accounted for in those economies. So we're not talking about in tremendously wealthy states, but we are talking about more income. It's certainly that percentage is rising, and a larger population. And so when we think about that market, those are markets that we're going to be looking at. It's not to say that we're going to be walking away from developed markets, but there's a slide I have later on that'll really show that, in a sense, we recognize that in the United States for sure. You've seen similar graphs last day or so in terms of global growth and our projections. One of the things that perhaps scares me more is that we have such a common view of where we see things going right now in terms of economic growth. I'd almost rather have a little bit more noise in the discussions, because that would aid to some of the discipline about where we see the things going. But arguably, these are the best minds at USDA that are putting these things together, and they see it the same way. Asia, certainly Asia less Japan, the growth is there. It's not as high as it used to be, but that's still 6–7% is tremendous range of growth. And then this urbanization issue. This gets us through, I think you can see, through a couple of years ago, the economies are changing. China's getting close to the 50% if it's not there. Indonesia. Again, this is when we start to see that concentration of those markets that are the potential is there. And that's where, in some cases, this issue of infrastructure becomes so much more important. What's it mean? Now, these come directly out of our long-term projections that we put out last month. In effect, what it's saying, and this is not just for U.S., this is for global growth in terms of exports of grains and meats, we're expecting it to go up. And this is a great example, and this is what I said 15 years ago. We see all this noise. We see all this noise in the history. It bounces up and down. Weather changes, all sorts of disruptions take place. And then we get into 2015 and 16, and we smooth it all out. Now, we know it's not going to have that smooth line, but that trajectory, our expectation is that that's going to hold pretty well. Now, that said, there's a tremendous amount of path dependence in terms of where we get, and this is the case for animals. In terms of meat production, you can't just turn that spigot on and have these animals showing up in the market. There are biological lags that affect things, as well as the cost of feed and some of these other items that we certainly have to take into account. And the fact of having ability to either graze or to some other way feed. But what we're expecting is that poultry is going to continue to be kind of the big market around the world in terms of growth. Now, I'll show an example as we get to China, that we're a little less exuberant, if that's the right word to use, about the prospects for the future than we were last year when we put together our long-term projections. And so those numbers that we had up there a minute ago are nice, and they're positive, and they're going the right direction as far as we're concerned. But they're not, we've tempered them a bit in the out years, in part because there are changes that have taken place in the market, and there's this recognition that these concerns about the ability to trade, the ability to move products around is important for us. Now, to get back on the focus on Asia, if you think about China in the blue, there are some commodity markets there that in terms of change, China is going to account for a vast majority of that growth in exports or their imports. And it's going to be coming from things like soybeans. We'll have some in pork, cotton, but even cotton, and we'll talk about that in just a couple slides about the issue of policies and how that affects trade opportunities. We can see that it's not just a story about China anymore. We certainly, for the last couple of years in the United States, have seen China grow in terms of a market for the United States, going from a good and consistent market to now the #1 market for our ag commodities. And that's an important change that's taken place, because for years, I always thought that it was proximity that made the difference. Canada and Mexico. NAFTA, the agreement, made it and opened up those markets, and they are important markets to us. But clearly, in the case of China, demand trumps almost everything else. So when we look at these projections going out and we think about the growth that's taking place, what we see is there are a number of countries that are going to be becoming important factors for all the world. This is not, again, just U.S. ag trade. This is what we see in terms of the composition of trade going around the world. And Africa, Middle East is going to be an important area for us, North Africa, Middle East in particular. And that's something that we just have to recognize when we have our focus. The other side, and this is going to some of this issue on, not even on the periphery anymore, about the growth in production and the competition that's going to be coming from developing countries. Again, the opportunity, the infrastructure that goes into place, we've seen it in terms of soybean production and so forth in Brazil, and corn coming out of Brazil at this point. We know that, and we're not, in the United States with rice, we recognize the important markets there. These developing countries are also recognizing that even though their farm populations are declining, in some ways that's actually giving them the license or the ability to expand their operations to take advantage of technological developments that couldn't be done on the small shareholders. Now, that trend is not something that's really taken off, but to the extent in the places where it has, we're going to see competition coming from other places. And that's another thing that we have to recognize, so that it isn't all about just our ability to export, but our recognition that we're going to have some competition, and that competition is going to come from a number of places. And again, we're going to have to attend to it. Just quick examples. I laugh at this. As an economist, I say developing consumers are typically price sensitive. I think the only person in the world that's not price sensitive is my son. And that's because he doesn't seem to worry about where these things come from. But at the same time, we've seen with the growth in, say, the Black Sea and some of these other areas, they're in and out of these markets. In some cases, the quality is a bit of a concern. But at the same time, we're really seeing some tremendous growth that's coming, and actually assumption of market share that's becoming very important. And until Rip and Andrew were putting together this report, I had not paid attention to India and its meat exports. They're telling me that by 2017, it will be the largest exporter of meat in the world. And that's not something that 2 weeks ago or a month ago, I would have been able to just get my head around. And so we now recognize that there's going to be some competition, and that competition is coming from sources that we didn't necessarily know. And that's competition that's both got the opportunity for proximity as well as for price. And as that infrastructure grows, we'll see that competition increase as well. All right. And again, back to the China story. Things have been great in the last 10 years or so. Australia's on here, Brazil, United States, it's taken off. And that composition, again, is not the U.S. composition on the pie chart. That's the composition of their imports from around the world. And we can expect that some kind of mix like that is something that we're expecting to see continuing. Maybe not necessarily at the growth rates that we've seen in the past, but certainly that it's going to be growing. And so it gives us some hope in terms of where we see strengths and where we don't see strengths about where we might go. Certainly, and I'll talk about cotton here in a second, that's not one of the brighter spots that I see in the market at this point. Cotton. Policies still matter. As much as I like to think that markets trump everything, individual countries, and China is a great example of it because it's so large, their efforts to develop their own agriculture, to strengthen their production systems, to strengthen their industries, oftentimes has market effects around the world. And this is just one of those examples. And that has been that over the years, when they have basically supported cotton prices domestically, and then at the same time tried to adhere to WTO obligations and keep their tariffs down, they've done a lot of buying of cotton and then storing. And as a result of that, that storage is now a burden on their market, and it's going to take years to clear off. So as we look forward in terms of the near term, I wouldn't be expecting to see much in terms of cotton moving into those markets for a while. But again, this is a case where in general, and maybe in the very long term, if we get out toward that longer period in 2024, we could expect to see something more happening there. But for now, as long as the policies play a role, and they will, we'll see that change. We'll see that at least diminished in terms of those expectations. Long-term projections, and this is again, this is a comparison of our last year's long-term projections versus this year's projections. And you can see where our assessment of, in effect, the China impact has pulled back on both grains, soybeans, and cotton exports, as well as meat in terms of trade around the world. It's bigger on the grains and cotton in particular, and again, primarily due to policy considerations. Meat demand seems to be pretty much constant, but we're expecting to see that diminish a bit. And that's one of the things that we have to recognize that I think is, again, this issue of the periphery. To the extent that these markets get stronger, that their production systems become more productive, we're going to see more domestic competition. Now, in this case, I think it's almost entirely driven by policy, but by the same token, that's the kind of thing we can expect to see happening, that tempering of some of those export opportunities around the world, and in particular going to China. So it's a place where we see something that's taken place, but that's, especially on the grains, oilseeds, and cotton, that's many millions of metric tons that won't be moving. Now finally, the last part, and this is something that just I can't get my